Now, notice Bitcoin is getting a little bit of an up move today. All right. That's a weak dollar response. That's normal. All right. Now, my issue here is that number one, we have a defined major top at 25,200 to 300. So that's your line in the sand. As long as that holds, you have to be on the negative side of Bitcoin. It hit resistance. It's pulling back off resistance. The other issue here is take a look at this. Basically, we had the 4 down days in a row, 1, 2, 3, 4. And then what's going on here? Let's draw a trend line in and put it in right there. That's a bear flag, an in spirit of bear flag starting to form. So when I see this pattern, what it tells me is that probabilities are now favoring downside on Bitcoin. Even if we get a little bit of a bounce here and there, as long as this pattern holds, essentially as long as price stays inside of this channel, you have to start thinking that Bitcoin has downside.
In today's video, our guest is Gareth Soloway, a skilled trader who will provide insights on macroeconomic factors, technical chart analysis, and potential trade opportunities for stocks, commodities, and cryptocurrencies. Before proceeding further in this video, please make sure to click on the subscribe button below to stay updated with our latest content. There was a lot of excitement at the start of 2023 with Bitcoin finally breaking out amidst sideways action and making a move toward the upside. According to Gareth Soloway, now that things have settled down a bit and the price of Bitcoin is lingering around the $23,000 range, Bitcoin is comfortably in a trading range, and that might be the case for a while longer, said Edward Moya. Since the beginning of 2023, Bitcoin watchers have focused closely on whether Bitcoin's price can breach $25,000. Between February 19 and 20, the level was briefly reached. Bitcoin has since fallen more than 6% and is currently changing hands near $23,200.
The low end of the channel would be your first target. That's around 22,400. If that breaks, which by the way, upsloping channels, if you look at a million upsloping channels, you'll see about 80% to 90% of them eventually break to the downside. Could be a month from now, could be 6 months, doesn't matter. The point is an upsloping trend line, 80 to 90% of the time will break to the downside. My guess is the break to the downside happens within 2 months, if not within a 1 month period. Okay, so that's your Bitcoin analysis. Again, Bitcoin right now chopping sideways. Again, reminder, that is a classic in spirit of bear flag. Bear flag by the name indicates that the probabilities signal downside.
The market turnaround has confirmed that the US dollar does not have a lot of room on the upside, at least until the February jobs report and inflation data confirm or refute one more 25 BEPS hike in June. It is said that instead of a recession, it looks like the U.S. economy will have a solid first quarter as retail sales jumped the most in 2 years in January. The dollar index, which measures the greenback against 6 major currencies, eased 0.2% to 104.78, from as high as 105.36 at the start of the week, which was its strongest level since January 6. So far this week, the index is down 0.4%.
We got some basic action here in the dollar. The dollar is weaker this morning. The US dollar is trading lower. What does that mean, guys? You should know this by now. If the dollar is weaker, assets like stocks and crypto are going to be higher. Now, the S&P is not that much higher. The spiders are barely trading up on the day, just a little bit. Last I checked, just over $1. Actually, right now, only 21 cents higher on the SPY. So again, what that does is it tells us that even with a sinking dollar, the markets aren't getting much of a bounce. And actually, this is something very important to understand. All right, I want to show you the charts here. What we're going to do is we're going to go into the charts. This is the dollar. All right, so basically what I want to do is look at this, right? And what we can clearly see here on the US dollar chart is that we had a down day, a small up day, and then another down day today. If we flip over to the SPY chart here, what we can see is that we had the down day and then a week up day when the dollar fell. Notice how we had a red candle here. Look at this. We opened here, and by the end of the day, even with a fall in the dollar a couple days ago, we did not have much of an up day. Yesterday, same thing. The dollar was a little stronger. The markets tried to fight, and they fell back down. Today, again, the dollar is sinking, and we're seeing the markets barely catching a bit. In fact, the S&P just went negative as I'm saying this. Now, the reason why this is important is that over the past years, and I mean, I'm literally talking years, the market has had an inverse relationship with the dollar. When the dollar falls, the markets rip higher. The fact that we're not seeing that here is very problematic. That's a problem. All right. So again, to me, that's a warning sign of issues to come. You guys know I continue to hold generally a fair amount of shorts on the market, and I continue to look for downside. Doesn't mean every day is going to be down. We're going to get bounce days. But ultimately, again, this is a market that is in troubled waters. We're basically entering a phase now where, yes, inflation's coming down, but not enough to get the Fed to step on the sidelines, let alone cut rates. And that is a major problem.
At the end of last year, Gareth Soloway predicted, "I think that in 2023, gold will outperform. But my guess is in 2024, Bitcoin will be the best performer." On the other hand, despite believing Bitcoin could drop further, Soloway is very bullish on gold, which has already had an awesome move at around $1,856 and broke through. Due to the inverse correlation of gold price with the U.S. Treasury yields, this could provide further downward pressures on U.S. dollar. Financial markets have been a two-tailed story for the early part of 2023, in which gold price has reflected in its price action like no other asset. According to macro analysts, March and April historically are two of the better months for the S&P 500.
Gold continues to bounce. I call this to a T. All right. So when we were number one, you guys know I've been bullish on gold for a long time. All right. But there was a point when we were up here on the chart of gold where I said to you guys, listen, I'm not advocating buying gold up here. Let it pull back. It's run too far. It's run too fast. No chart goes straight up, at least on a healthy basis, and no chart goes straight down on a healthy basis. So what do you want to do? You want to wait for a retrace to the scene of the crime. This is classic methodology from the Winning Trader series, available at verifiedinvestingeducation.com. And I teach this stuff. I teach all the ins and the outs there. But the bottom line is, look at the retrace and look at the level. Pivot high, choppy breakout, retrace to the scene of the crime. That was your buying opportunity right there. I picked up some GDX. I picked up some other things out there. Again, if you're a member of InTheMoneyStocks.com, you know exactly what I picked up over the last week or so as we were coming into this level. Gold is having a nice bounce today. GDX is up, etc. All right. I still believe gold will be the best performing asset. For the next 12 to 18 months, I'm anticipating a drop on the S&P 500, another 22% to downside to this long-term trend. Now, you'll have big bounces along the way. Don't go and misconstrue what I'm saying. I'm not saying that we're going straight there in the next 3 weeks. I'm saying that over the next 12 to 18 months, we are going to meander down to this level down here. All right. And again, that's right around 3,000 on the S&P 500. So what that means is that S&P is going to underperform. If the S&P is underperforming, you better believe it that Bitcoin is going to struggle as well. It's a risk asset right now. All right. Yes, I do believe there'll be a pivot point where it becomes more like gold. That's not yet. We still have to wait for that to happen. Probably coincides with regulation and bigger money starting to feel comfortable getting in the crypto space. But bottom line is, if we head down here, assets across the board are going to go down. I do think gold would gain traction, though. Gold is a safety asset. It's also an inverse dollar play. The dollar at some point, and we're starting to see it now, starting to weaken, and the markets are not rallying. There's going to be a point where the dollar is falling, and this is the scariest of all. The dollar falls, and the markets fall too. That's the worst case scenario. That's telling you we're in a very bad recession when that's happening. And even with lower rates, and this is the key, even with lower rates, what that's telling you is that the market doesn't believe that the recession will end, meaning the Fed has lost control. And that is the worst case of all scenarios, where the Fed loses control.
Soloway believes in 2023, although it's a little trickier with Bitcoin now because as Bitcoin gets to a low, it's a little harder to think about. If it bottoms out in June or May of 2023, where is it by December? So it's a little trickier, but I still would go with the safety of gold with the uncertainty in crypto right now. Soloway predicted Bitcoin still has a way to go before it truly bottoms out this year, but he's bullish on it for 2024, while gold is his asset for 2023. Shouldn't Bitcoin and the crypto market be plummeting right about now? Our discussion for today has come to an end. We invite you to share your thoughts in the comments section below. If you found this information helpful, please consider giving this video a thumbs up and subscribing to our channel. We look forward to bringing you more updates in the future.